All right. Hello once again, everyone. My name is Dennis Horrigan. I am a partner at Connecticut Wealth Management, and I have with me once again my friend and partner, President and CEO of Connecticut Wealth Management, Kevin Leahy. And we have an awesome guest and a longtime friend of our firm. Burt White is with us from LPL Financial. Burt runs the entire investment operation really at LPL Financial. He is Chief Investment Officer. He oversees their investment solutions department. He kind of does it all for LPL as it relates to investments. So we are really, really honored and pleased to have Burt with us this morning. Welcome, Burt.
Good morning,
Hey,
Burt.
good to see you guys. Hope all's well.
Great to see you. Hey, we're familiar with LPL. Obviously, we've been working with you guys for decades now, but not everyone is. So can you give people a little sense as to what the research department is at LPL and kind of what your function is?
Sure. So we have about a 40-person research group. What we do is we dedicate studying the market, studying the economy. Those are two different things, by the way. Maybe we'll talk about that a little bit later, but we study the markets, we study the economy, and we study how to actually transform that into solutions, into portfolios. And what we do is we stand behind Connecticut Wealth as just a resource for you guys to be able to tap into. And as you're beginning to think through how you still steer each of your clients towards their goals and dreams.
So, Burt, I want to follow up on that, but I first want to make sure that you do know that I put a blazer on for you. Dennis and I have done a bunch of these, and I've worn the quarter zip most of the time, the sweater occasionally. I went with the blazer for the great Burt White. So I just wanted to make sure you saw that.
It looks great. I'm glad you didn't pan down to the bright green sweatpants. I think I saw earlier.
No doubt. So I imagine like Connecticut Wealth Management, like so many businesses, you guys have had to change it up a little bit, maybe at LPL. Certainly I guess the question is, what, if anything, have you had to change up with the research, your research department?
So it's a great question, and I think like the rest of the world, we're all trying to figure out a way to juggle not only our important roles, but also our lives, right? Very similar to Connecticut Wealth, we're essential businesses. You are an essential business because the reality is, being able to help provide all of your clients in your community with the advice to be able to help them get through this tough time is as important as anything out there, right? Our team is the same way, but we're being very careful about how we do that. So we have about 4,500 people that work for LPL. About 95% of them are working from home now. We've had a relatively digital footprint for a research group anyway. We were part of our team's in Boston, part of our team is here in Charlotte, that's where I am, and some of our teams in San Diego. So we've been working sort of in a remote environment for a long time in a very collaborative way. And so just moving this into an office space like this is not a big hindrance for us. But at the same time, these are periods of time where, like anybody, you're trying to juggle the emotional side of this. And Kevin, we've talked about this before. This is not just an economic recession. This is an emotional one, and what's going to get people out of this and what's going to make us bounce back is that we've got to get our confidence back. If there's anything that's down, it is confidence. And what I've been trying to tell people is there's four things, right? Like consumers have to feel confident enough to spend. Businesses have to feel confident enough to hire. Investors have to feel confident enough to save. And the big one, families have to feel confident enough that they are safe. And I think when those four things all happen, that's when we'll begin to get back to some semblance of kind of a new reality, because things will always change after these. But the reality is that's what that is. And so that's really what we're trying to do, is we're trying to not only provide confidence for our own team and our families, but we're also trying to make sure that we use our roles to make sure we help with you all to provide confidence to the community and to the many investors out there that need it.
You talk about, Burt, you talk about confidence, talk about savings, and the statistics that are coming out, the data that's coming out at us fast and furious every day. A lot of data came at us yesterday. What are the signals that you guys are looking at, specific signals that you guys are looking at that are going to alter the recommendations that you make as it relates to people's investments?
Yeah, what's really fascinating to me is that, when we think about investing, we take a very similar approach to, I know how you all, how we think about and you think about investing with your clients. And that is, it kind of starts with kind of an investment plan. And it starts with those planning component pieces. Because the key part about a plan is that it's not just about how you get to the good stuff. It's how you get to the good stuff through the bad stuff, and so we do the same thing. And so what we've done is we've sort of set through what we call the road to recovery. What are we looking for to be able to see that this market is beginning to get through a bottoming process? And I say that because the bottom is not a day. We might go back 5 years from now and say, ooh, the bottomed on that day right there. But that's not how the market's bottom. It's through a process. And that process can be weeks, it can be months, it can be quarters, right? And so what are we looking for? And so from our perspective, we're looking for 5 things really quickly. The first thing is we're looking for confidence that we're starting to see new cases of coronavirus begin to move lower. You don't need to see it completely go away for the market to begin to get confident. You just have to see that stabilize and the curve begin to shrink. We're there. The second thing is you have to be able to price in, you have to be able to recognize that you're in a recession, which we are. We are in a recession. But you got to measure how big that recession is. The worst recession we've had was the Great Recession. Stocks dropped about 50%. The average recession drops 36%. This particular period, we dropped 34 at the peak. We think this is more like an average type recession. It will be steep for a short period of time, but then begin to come back a lot sooner than maybe prior recessions may be as we go through this. And so that's the second piece. The third piece is, did you price in that recession, which we did? Fourth, was there a lot of sellers? Did we get to that? And I think we all remember, 6 weeks ago when the market did hit its low, anyone that wanted to sell already sold, right? And then the fifth one was, is there enough policy from monetary and fiscal policy to be able to be the backstop to help us get through that? So cases, are you in a recession, pricing in the recession, are all the sellers kind of washed out and wringed out of the washcloth? And lastly, is there that stimulus that's going to allow us to get through it? And I would say that we are either through all those or largely through all those, which tells me that we've and I think the market's pricing this in. You've seen the market rally quite dramatically. We had the very best April we've had since 1987, best month since 1987, and best April since 1938. And so the market's rebounded quite a bit based on the fact that it's looking at those same 5 things that I'm looking at. And it doesn't mean that we're out of the woods. Doesn't mean there might not be some tougher times to come. Doesn't mean that prices might not move a little lower from here. But what it does mean is there's visibility that the bottoming process is happening. And then when we look out a year, end of the year or so, that we'll probably be at higher levels than we are today.
Awesome. So Burt, if you take all of those things, and I'm sure all the other things that you're following, is there a particular thing, is there something that you're most optimistic about? And then I guess the follow-up would be, what scares you the most or what has you most concerned?
I think what I'm most optimistic about is the resiliency of Americans. It's interesting. I will tell you this: there's a lot of places where you can go on social media, or if you really want to feel bad about the world, go pick up any financial article on like Yahoo or Google or whatever it is, and then go down to the comment section and read that. If you really want to feel bad about the world, just go do that for a while, right? Look, there's lots of pessimism out there. There's all kinds of stuff. But I will tell you this. You want to think about resilience. Go and look at the frontline workers. Go and look at, restaurateur folks that are trying to make sure that they feed America. You go look at, some of our sports athletes that are donating tons of money to be able to go feed hospitals, and, on and on and on and on and on. Like, you're starting to see it. You see our government stepped in and did more stimulus than ever before. $6.7 trillion in stimulus. That is a ton of money to be able to backstop. It's about a third of our economy. So the reality is there's a lot of people hurting, but I think the resilience of America has been on display, and that makes you feel really great about that when we come together. You asked about the speed bumps. To me, I think the biggest, there's a couple of speed bumps here, and I think we talked about it a little bit, and that is the emotional side. I think people right now haven't fully processed, the emotional side of this. And so, I think what we've been trying to do is just get to tomorrow, and figure out how we're going to get the kids to be able to log on to Zoom and, do their art class, and we're just trying to get through that. And I think at some point in time, we're going to sit back and look at that. And I think that will get processed into, what this world looks like. I think the other thing that I'm a little bit nervous about short term, and that is the market has rallied a lot, and I think a lot of optimism has been priced in. One of the things that we oftentimes talk about is something called a decision box, meaning that the market sort of kind of moves up and down and up and down and up and down and up and down, doesn't really go anywhere over a period of time. It just goes up and down and up and down and up and down and sort of waves around a little bit as it's making that bottoming process before it begins to break out and move higher. And I think we're at the top end of that decision box. And, and so I think that you're going to see lots of volatility here. If my guess would be, or my deduction would be, that we'll probably see slightly lower levels than we are today at some point in the near future. That said, I think by the end of the year, we will see higher levels than we are today. And so I think that bottoming process is there. And I think short term, we've got a lot of optimism, excitement around, what this might look like. And I think some realism will set in. And I'm afraid that people will panic again. One of the things I've been trying to tell people is, go back to how things felt on, the end of March when the market was down 34%. And then maybe how things feel today and a little bit more optimistic. And both of those are equally troubling. And what we need to make sure we do is to stay to that. What drives the oceans are not the waves. What drives the oceans are the currents. And we need to focus on the currents, not the waves. And the waves are hitting us every day. Don't focus on the waves. Focus on the currents. And that's really, if we continue to do that, focus on our plan, focus on the currents, we'll be able to get through this.
I like that.
I love
Good
that
analogy. Yeah.
That's a great metaphor. You spoke about visibility for some of these issues. It felt the first couple, 2 or 3 weeks, I'm sure you guys would agree, I felt like I was in a fog.
Yeah.
All day long. It was an exhausting fog that just kind of enveloped me. And I feel like the fog has been lifting over the last week or so. And my sense is that a lot of people are starting to feel that. What should people be doing today? This is the beginning of May. What should people be doing today as they think about their investment plan?
Yeah. Well, as an investor, I think that you need to stay, with your plan. That's the most important thing to do. The last thing you want to do is to alter your plan in the middle of a crisis. For gosh sakes, that's the last thing you want to do. I think staying with your plan is important. I think the clarity is what prevents us, what makes us want to deviate from our plan is that emotion. It's that fog. We can't see, and we're sort of blindly following the compass. It's kind of like being a plane in a cloud, and you're using the instruments. The earth is down there. It tells you it's there, but you can't see it, and that's scary, right? And I think that what's happening now is that you're starting to see some of that begin to dissipate, like you were talking about, and hopefully that allows us to be able to do that. I think there's a healing that is more than just investment portfolios. I think there's a healing of what this new world's going to look like. I'm a big believer in two things, and they seem contradictory, and maybe they are, but I hope they're not. One of them is, I think the biggest lie in investing is that this time is different. I can't tell you, I've been investing for 30 years, and every time we go to something, people say, oh, no, but this is different. We might call it different things, like 9/11, or like the financial crisis, or Y2K, or the Great Recession, or coronavirus. We might call it different things. It might be caused by different things, but they're the same things. But on the other side, I do think that the world will be changed after this. I don't know how per se, but I think we need to be ready for it. I think how we think about schooling will be different. How we think about, are we going to be sitting next to people crowded into the game they're watching the Knicks? I don't know, and I think the reality is, I don't think that the movie's just paused and a few months from now we'll unpause the movie and it'll just start right where we were. I think the world's adjusted a little bit. And so I think that for most people that have that investment plan, let this lifting of the clarity give you confidence in that investment plan, but then begin to think about making sure that you are getting ready for and adapting to what this new world's going to look like, just as you are thinking about these things for your clients from an investment perspective.
Yeah, great answer. Hey, Burt, I know you're a busy guy, and this has really been helpful. We're very, very thankful. We talk about this all the time. Your team is just a huge part of supporting our team, and we're really thankful. You've been a great friend over the years to our organization. I know, again, you've got a big job, a lot of people. You got four daughters running around that you got to play dad to and all that. So for you to take the time this morning has really just been awesome. We're really, really appreciative.
Hey man, thank you very much. You guys are great friends, and the work that you are doing in your communities is just not lost on anybody, and it's not lost on me. And I love you guys for that. Stay safe and healthy, and can't wait to see you really soon.
Awesome, great. Thanks, Burt. Really appreciate it. Good seeing you.
Awesome.